Hello, Montgomery.CPA here, and welcome to this week's Montgomery Minute for Individuals. With December here, now is the perfect time to discuss year-end tax planning for individuals. The window for making impactful moves to reduce your 2024 tax bill closes on December 31st, so let's dive in. First, let's address a common question. What can I do to reduce my tax bill? I get this question a lot from clients. The answer often involves parting with cash. Look, there's no secret to deductions. All right. Deductions equal parting with cash, spending money. Okay. Either permanently, like charitable giving, or temporarily parting with money, like contributing to a retirement account. Okay. But let's look at things a little bit let's briefly touch on five things here. Okay. Charitable contributions, donations made to qualifying charities. Is there a limit? Yeah, 60% of your adjusted gross income you can contribute to charitable organizations. Okay. Can be a nice write-off. All right. And that makes it so if you're itemizing, then that's one of the things you can claim. Retirement contributions, always max out any retirement contributions you can do, 401k, IRA, things like that. Um, Harvesting tax losses. That sounds like a complicated term, but it's basically, hey, look, if you have some investments and they're underperforming, in other words, they're losses, you have losses on them, consider selling them before the end of the year so you can write those losses off. All right. That's what harvesting a tax loss is. And then another thing is a flexible spending account. We don't see a lot of these flexible spending accounts anymore, but if you do have a flexible spending account, make sure you spend it down before December 31st. It's things like dependent childcare and medical expenses. Okay. Prepay any deductible expenses. So if you have some deductible expenses that are coming up in January, pay them before December 31st. So we get the deduction now. Okay. But let's talk about itemized deductions because we always hear about itemizing or taking the standard deduction. So let's cover it real briefly, okay? The standard deduction, which basically means you get to make this much money until you pay tax. All right. For individuals, it's $13,850. That's your first freebie, okay, that you don't pay tax on. For head of household, all right, $20,800, and for married filing joint, $27,700. All right. That's what you get to make before you pay any tax. All right. Now, if you have enough itemized deductions that exceed those amounts, then you get to itemize. But what are itemized deductions? Look, it's real simple. There's four categories of itemized deductions. Medical, okay? But don't get too excited about medical. All right. Congress comes back and says, well, you only get to deduct medical that's in excess of 7.5% of your adjusted gross income. Look, I know it's a big sentence, but if your total income is $100,000, all right, which is basically your AGI, adjusted gross income, then medical expenses in excess of $7,500, you get included in itemized deductions. And these include premiums, copays, deductibles, and prescriptions, those four categories. Okay. Next thing are state and local income and property taxes you get to take. The third category of itemized deductions is mortgage interest on both your primary home and, for those of you fortunate enough, a secondary home. Okay. Um, and then lastly, charitable contributions. So it's just those four categories. Okay. And that's what itemized deductions are. So if you have those itemized deductions that exceed that standard deduction, then you get to take that. But I will tell you, ever since the 2018 Tax Act, before the 2018 Tax Act, 30% of Americans itemized. All right. 70% took the standard. Since the 2018 Tax Act, which doubled the standard deduction, only 10% of Americans itemize anymore. 90% take the standard deduction. Okay. All right. This is a long Montgomery minute, I know, but I'm almost done. All right. So with December 31st fast approaching, it's important to manage your expectation. There's no magic wand for deductions. Deductions often mean, like I said, spending or, departing with cash. Okay. And so some thoughtful planning right now is a good idea. Reach out to us. We love doing year-end tax planning for our clients. And thanks for watching, and we'll see you next time on the Montgomery Minute.